Good evening, all. Ira Epstein with your SPDR ETF wrap-up for this Monday, the 12th of September, 2022, and the time right now about 5:40 p.m. Central Time. Well, we had Twitter down, whistleblower, market down there. TLT was down, the dollar index a little bit lower, but everything else was very much in the green. And what the market's doing is it is continuing its anticipation that CPI is going to fall down and everything's going to be rosy, that the Fed doesn't have to continue raising rates at quite the pace that it had to, and that the two will come together, falling inflation here and there. And I do think that headline inflation will fall. I'm with the consensus of probably a half a point. We were at 8.5% last July, this past July. In August numbers, they're talking 8%. But it's the core CPI that I'm concerned about, and I've mentioned that to you every day because that's really what the Fed watches because it takes out food and energy. You know, used car prices came down, gasoline prices have come down hard, food to a degree, although I question if food's got a big decline ahead of it any longer. I saw today the USDA numbers. Now they got to get the harvest, but they took away a lot of acreage. And that acreage that either failed or didn't get planted keeps our grain very tight for the near term. But what happens if you come in at the numbers that the trade is looking for? Have you discounted that going into the report? I think you have. Do I think the Fed is going to go 75 basis points before I see the report? Going into it, that's what I think. If there's a huge surprise, which inflation is not as hot, let's assume you fall a percentage point, 7.5%. Let's assume that core inflation, instead of going up, actually stays steady or falls. Well, that might mean that those people that are buying this are very right. I'm just not in that camp yet. Tomorrow's the report. Why not wait and see it? When I look at the markets that were hot, Shopify was one of them today, up 1% on the day. You can see you've been getting a nice bounce in the market. It's a vertical price rise. It's just run to the upside here. The market at first stalled on, and I think you can see this on Friday. You went up, stalled out at the 50-day average. Today you're climbing a little more. So where might it go? Well, the next stopping spot is right here, the 100-day average, and the Bollinger Band's going to be right about at that number tomorrow when we reopen. The way the math will work, it'll slip down to about that. So that's going to be a very strict, rough spot. The problem for the market is if you went home with your positions and you're waiting for the markets to open in the morning, you'll already have the CPI number. You're either a big winner or a loser. I can't help you with that. And you're overbought. I see a market that is not trending, that really what the market did, and I'll show this once now because it's important for all the other charts I'm going to show. If I take you back just like this, from this point on, you had in there the Jackson Hole break in the market where the Fed scared everything. And you have a pattern of lower highs, lower lows. The market comes up and this is, by the way, Thursday, you break through 31.99. You've ended the downtrend and you lose the embedded reading. Do you see that right there? You hear me talk about this all the time. Unless that reading embeds again right off the bat the next day, the odds favor price and the 18-day average, the red line, are going to make a run at each other right away. That's exactly what occurred, and today's a little extra follow-through. You're going to see that pattern in a bunch of markets. I could even make this one extend out. You'd see it, but here, and this to me is the important part. You see that when did you lose the embedded reading? You got over 20 on Friday, but over 20 is not my number. You got to be over 21. But if it stays over that and tries to move up, the 18-day average is likely the target. Tell me that isn't what's going on. In Apple, let me walk you through this and you tell me what you see. So we'll come back just like this. And here is the market on Friday, still embedded. If you lose the embedded reading, the first resistance should be the 200-day average, then the 18. It all happened today at one time. I didn't see that coming, and you lost the reading. It's rare that it happens, the embedded reading is lost and the upside targets are hit all at once, but it does happen. More times than not, you'll get a day or two before the market starts making that move. It doesn't mean you shouldn't be out of shorts. The way I teach it, you should be. In Disney, Momentum coming up, you're in a resistance zone. You have a pattern of a lower low and a higher high. There is no trend in this market. In XLF, what we have is a lower low, higher high. Another one of these markets when you got that embedded reading and it turned right back up and you went for that number. Where are you going here? Do you honestly think you're going to make new highs on it right now? That's what people are betting on. They're betting that once the market broke the pattern again of lower highs and lower lows, and you took that out right here at 33.81, that it'll just keep going. Okay. Obviously, if interest rates were doing right and the public wanted to loan, they had to go to bank and expand business, this would be right. The problem is a lot of people are pulling back. Did you see Goldman today? Goldman Sachs? They're going to be laying off hundreds of people. And this happens too with mergers, acquisitions, and the deals aren't happening. They don't need those people. Well, that means the demand for some of these services aren't there from the financial arena. In XLI, here too, you lost that momentum right here. And then the market took its days to get back up. Always pay attention to that. In the semiconductor, right through here, you had gotten the market down. If we come back, I don't even know if this one was embedded. It was pretty close to it. So let's just see. You need to have several days in a row. And I think you'd agree with me. Okay. Both numbers are not under 20 right there. So day 1, 2, 3, you're embedded. What happens if you lose the embedded reading? You did it there. This is that scenario that I wanted to show you. Then the market starts creeping up. Now, the goal is the closest main moving average, but often you reach for the 18 regardless. So the first spot is the 100-day. You can see how you played around there. And today it went and completed the attempt or trying to get up to the second. But it's hit its target. That's the point that I'm making. In the home builders, you lost the embedded reading. You went up here. Now you hit that 18-day average. Market after market after market. I provide a service where people pay me, put me in the market, do this, do that. I have my clients, the traders, cash-wise. I want to see the CPI number. I can always get back in. I may go to cash come Friday if I put them into things, and maybe Monday. I don't want to go through the FOMC meeting. I'll wait and see it, although I think if the CPI comes out as I think it will, I think it's not going to be a Fed meeting to be scared of. I think you build into it a 75 basis point hike, if I'm right. If there's a surprise on this CPI, I mean, it's much lower than the trade is looking for, no, then it's a whole different ballgame. Again, I'm going to repeat. I told my clientele be in cash going into tomorrow's report. GLD, right up to the 18-day average, lost the embedded reading. Making sense to you, how you got the markets neutral? GDX, embedded reading, see it all through here. You lose it, then the market came to you. I'll just show it again. This is the enhanced Bollinger Band course. You want to take this and learn how to do this yourself. Remember what I said, more times than not, by a lot, the market will give you a respite. Hey, it's going to go somewhere. I don't wait around on it. I don't wait to see if the next day it's going to re-embed. Get over that 21 reading. For my money, I want my clients out of the market. Here's the market, day 2, and then today, day 3. I'm not cherry picking. It's chart upon chart. This never embedded. Not the same thing. And in an uptrend, which has me even more confused. China's doing more and more lockdowns. Why is copper going up on that news? The only thing that could be going on is that the market thinks that CPI is falling enough, in my opinion, that we will get to the point where the U.S. doesn't have to keep tightening. Do I think it's right? I'm not convinced. Fundamentally, chart-wise, it's bullish. TLT, bearish still, coming down. I had my clients short this. I told them in line with being the other markets, hey, I don't see you going through that report. What are you hanging around for? UUP in the dollar. Well, you came back, you lost the embedded reading. This is a flip-flop, and it's fun to show these things every now and then. So here is the market fully embedded bullish. Get ready. Here's the market closes under 79, a 76 reading. You've lost the embedded reading. You'd have to gain it back the next day. Again, the odds are 1 in 20, something like that. It's rare that you do it. You do it, but it's rare. If it falls, then I'm targeting the 18-day average of closes. And that's where you win today. So, in summation, that is what this is about. Now, we're going to discuss this and a heck of a lot more if you want to come to the live webinar, because we're going to have so much to talk about this Thursday. The reason I'm doing it Thursday, I get to see CPI, PPI, and then on Thursday we can talk all this as we get ready for whatever the Fed is or isn't going to do. So we're going to do chart analysis, logic in the market. When you join, it's totally free. There is no charge to come in. You have to sign up ahead of time. It shuts off. People won't be able to get in once we fill up. That's how it works. And I want your questions ahead of time. So when you sign up, you'll see in the sign-up mail that you will get, you can write me your questions ahead of time. Don't write me during the 20-minute interview, okay? I don't have what Kramer has, a slew of people preparing the charts from. Do you think he just calls up those charts? They're all made for him. He knows what they're going to bring up, what's going on. He's got his people doing the screening on the phone so that his quick round is very fast and right to the point. He's got to be able to do that. What he knows in his head, he knows. He's not prepped for that. But the charts will come up. I don't want to waste time bringing up the charts. Let's get you to get everything there. I'll answer your questions as we go. I do not record it. You cannot view it on the website. I record it for our regulatory purposes, but we don't make it available to the public. I want you in the chat room. So again, you can either call my staff, they'll work with you, or you can just follow this link. Go right up here to the very top. You'll see an icon appear if you take your cursor up there. And what do? Just give it a click. You can sign up that way. I'm Ira Epstein. I'll see you all tomorrow.